Hey guys, welcome back to the channel. Today I'm talking about Metaverse stocks. You may have heard about the Metaverse becoming a massive thing in 2022 and beyond. So I'm going to bring you 6 stocks today that are well into the Metaverse, and amongst other things they are diversified companies, so they've got massive revenue streams from elsewhere. But this is a significant sector, a massively growing sector, that there are going to be significant returns to be had over the next years and beyond. So if that sounds like something you're interested in, smash that like button, consider subscribing to the channel, and I'll see you in there. Hey guys, welcome into the video, and we're going to get straight down to it. The first company we're talking about today is Autodesk Inc. ADSK, market cap of 62 billion, down quite a bit from its previous highs in August 2021. This company is a building modelling company amongst a hell of a lot of other things, guys. I can't begin to express just how much this company is into. You'll have to get onto their website and check this out. But they have a PE ratio of 47, so that's not too high for a tech company, which is good. A good history of revenue beats on previous quarters. You can see annually their revenue is significantly growing, up to, in 2021, $3.7 billion of revenue and actual earnings of $1.21 billion. And you can see that that business model is growing nicely. A little loss in 2019 through to a small profit in 2020, and then growing that significantly in 2021, and that is going to be continuing for sure based on the current trends. Rated as a buy by quite a few analysts, and it is currently at the low end of the average price targets from these analysts. The average is 329. It's currently sat at 282 with a high of 440, so that is almost a 100% return on your investment if the high end of the analysts' ratings were to be achieved. So if we pop on to Motley Fool, we can quickly see that Autodesk engineers and architects use Autodesk flagship products to design buildings. Buildings are always been designed, so the cities are developing all across the world, so being able to do this in a virtual reality state and being able to do it easier is far better for engineers and less expensive as well, which gives this company significant revenue. If you have a look at just how good the Autodesk's revenue change has been since 2018 through to 2021, it is up 90%, which is absolutely fantastic. The share of revenue across the world right there. The business model has reported really good results in Q3, which ended on the 31st of October, where Autodesk revenue rose 18% to 1.12 billion even, and that is growing massively. The key investor takeaway is that the Metaverse is becoming only limited by a creator's imagination, which is absolutely huge with regard to the internet. So companies like Unify Software and Autodesk are designing the building blocks needed to enable businesses just like Match Group to build their Metaverse vision. Even if the Metaverse in an very unlikely event flops, the company will still have thriving businesses underneath that, which actually de-risks its investment nicely, and growth investors should definitely consider this stock going forward. Anyway, we're moving on to the next one, and the next company is NVDA. This is an investor favourite, a market cap of a huge 747 billion. Its PE ratio is slightly higher at 92, but this company right now is firing on all cylinders. It's dropped back from its high of 329, but all the sectors of this company are growing and growing fantastically well. A lot of analysts out there expect this company to do incredibly well in 2022 and beyond, and there is really not a lot out there that suggests otherwise, to be fair. Look at these earnings beats here, massively climbing ridiculously well. That is such a good trajectory to be on. And then once again we have a look at the revenue and earnings. A little bit of a loss in slowdown in 2020, but then it makes up for it in 2021 with revenue of 16.68 billion and actual earnings of 4.3 billion. Absolutely huge. And then we have a look into the recommendation trends. We come out with a buy. Its current price is $300. The average price for analysts is $342, so that is a pretty decent return on your investment right there. The high end of this is $400, but the low end is quite down at $177, so some analysts do find this company overvalued. I find that hard to believe myself based on the amount of sectors that this company is in and its performance at the moment. I think that the current share price is slightly overvalued but fair, but it can significantly climb from there if it continues on this trajectory that it's on and it continues to outperform. If we have a quick look at NVIDIA's last results, the Metaverse is just growing all over the place. It has record revenue for the quarter of $7.1 billion, up 50% from the earlier year. The record data center revenue of $2.9 billion, up 55%. And gaming revenue, that's where the Metaverse is at currently, and the cloud being part of that, up 42%. These are huge growth statistics for such a mature company, guys. I can't get that through enough that this company is performing fantastically well. Moving on to the next one, it is hard to mention the Metaverse and Metaverse stocks without actually including the company Meta, formerly known as Facebook, or the ticker it says here on Yahoo still is FB. Market cap just below $1 trillion for now, dropped back from the 6th of August high of $378. Market cap is $950 billion. It did kiss very close to the $1 trillion cap, but then dropped back a little bit since then. Its PE ratio is remarkably low for a tech company, actually at only 24. That's not too bad at all. And then if we have a look at the earnings in previous quarters, it has beats all over the show here. Not quite such the trajectory of NVIDIA, but they always beat what they say they're going to do. Then when you have a look at the revenue trajectory, that is looking far better. The company has made earnings in the last 4 years, dating back to 2017. It had $14 billion of revenue in 2017 and made $15 billion in profit. When we follow that through to this year, $87 billion in revenue, guys, and of that, $30 billion was earnings and actual profit. That is absolutely phenomenal performance, and it is exactly what I believe this company is actually undervalued at $950 billion that it has. If we swing into what analysts recommend, there's loads of analysts covering this stock, of course. It is rated as a buy. Its current market price is $342, which is well below the average consensus at $400. And then if you look at the market high, $466, so that again is a significant return on your investment should the high get reached. It's been upgraded recently by HSBC from reduced to hold, so people are starting to take advantage of this company, especially as it's starting to come away from the lawsuits that it was fighting. Can't mention Meta without showing Oculus Rift, and that is where the Metaverse is at, getting right in there into virtual reality. This company is well known, Facebook, Meta, well known for being one of the leaders in virtual reality, and that is starting to come to fruition, and a lot of people believe that 2022 is going to be a big year for this. And if we have a quick look, there's two internet giants named as top picks for 2022 by Brian Dagon on investors.com. One of them was Amazon, which I'm about to cover in a little bit, and the other is Meta Platforms. And they've come away from Alphabet Google, which was the top pick in 2021, with gains of 69% that year. If you just have a quick read through this article here, you can see exactly why the prospects are going so well. Meta has a price stock of $390, but it's actually, well, it was $390, but it's down at $342 at the moment. However, the company is doing particularly well. The price target for Amazon is $4,000. It's currently at $3,300, so there is a huge return on your investment to be had there too. And then that's exactly what we're going to do. We're going to pop on over to Amazon and have a quick look. There's a few spikes here on this $1.7 trillion capped company with a PE ratio of 66. Again, not too bad for a company that's got such high revenue. Performance of late has dropped off slightly, which is why the share price has stalled, but I believe over the coming quarters and over the coming years this is going to pick up again significantly. And if we have a look back to 2017 through to 2020, you can see that this company is doing fantastically well. Revenue of $386 billion and actual earnings of 21 billion, so pretty well. And it's been using this money to refund and basically take the fight to every company out there. If you look into where Amazon is literally in a fight with absolutely everybody, even other big tech companies. If we have a look at the ratings down here as well, again, very well covered. We have an average price of 4,100, the low is 3,700, the high is 5,000, and it's currently at 3,300, which is way below the consensus for analysts, which again indicates there could be significant profit to be had here, guys. Our next company is an absolute juggernaut, and that is Microsoft. You can't mention the Metaverse, virtual reality gaming without Microsoft, with its significant cloud capability and the Xbox side of things, of course. $2.56 trillion cap, but a PE ratio of 38. Again, not massively up there and overvalued in my humble opinion. The trajectory for EPS beats is going particularly well again, bit like NVIDIA's. If you quickly look over the financials from 2018 through to 2021, revenue of 168 billion versus earnings of 61 billion. Loads of money there for this company to take out significant acquisitions, which is exactly what it does. It brings loads of companies into the Microsoft family and then grows them as well, which is why it just continues revenue beat after revenue beat. Again, highly rated as a buy by analysts. The average price consensus is 367, above the 341 that we have at the moment, and then a high of 412, which again offers significant headroom to grow. If we have a quick look on the website here, MSW Dynamics World, Q1 2022, Azure growth is steady. We have 20 billion of revenue. In revenue of 45 billion that came from Azure. They had a very strong start. The Microsoft Cloud, again, that is what's going to power the Metaverse, guys. Cloud entertainment, virtual reality, that is what is going to get this party started, essentially. And the last company I'm going to cover today is C Limited. This company is growing at a phenomenal rate. Market cap of 118 billion, and is actually significantly down from where it was on November the 1st at 357. Massive buy opportunity to be had for this company, guys. I really cannot stress that enough. This company is doing well. There is a slight concern that it is still not profit making yet, whereas all the others I have covered have been that way, and it has missed its actual APS shares for the last 4 quarters, which again might be why the company is down where it is. But if you look at the revenue growth this company is going through, it's spending a lot of money to do so, but it's actually absolutely flying along. The slight downside and the slight concern for investors will be that it's not actually turning over a profit yet, but eventually I believe with the growth trajectory that this company is on, it will get there. I'm absolutely certain of that. Being well covered by analysts at the moment, again with a buy rating, of course, with an average price of $3.99. Its current share price is actually $2.13, which is a huge difference, guys. Even the average price for what analysts say, that would give you almost 100% return on your investment right there, doubling your money. The actual high price on this one is $460, and it is currently only at $2.13. We just have to be careful. You have to keep an eye on it. This company does eventually start to turn a profit. Once again, Motley Fool have covered it. It is a global e-commerce giant in the making, and its revenue has grown 2,620% since 2015, guys. Absolutely massive. Despite being a $122 billion company, it still grew its top line by 122% in the quarter. There are some headwinds. It is a massive company in Southeast Asia, Brazil, Taiwan, and the like, which is absolutely excellent for the company. But it has said that it's trying to move into France, Poland, Spain, and India. Especially as it comes to Europe, it's going to get competition from Amazon. There is no doubt about that. But it is dominating the rest of the world, so there is still a significant share for this company to be had in Europe. Even if it doesn't become number one, there is still a lot of revenue for this company to have, I believe, which is fantastic for the future. And this company has been absolutely hammered in its share price, perhaps unfairly so, I would argue. Sorry for the slightly longer video today, guys. Just had so many stocks that I wanted to cover. There was more than this, to be fair, but I could only get this many in the video. So much value to be had in these companies, so much future growth available. The metaverse is only just getting started, and these companies can significantly leverage that to aid their top and bottom lines and make even more revenue, boosting the share price massively. I hope you've enjoyed the video today, guys. If you could see your way to smashing the like button and subscribing to the channel, that'd be absolutely awesome. I'll see you in another investing episode. Catch you later.